What is inheritance tax in Europe for American expats? Imagine inheriting a family home or a savings account while living abroad. You might wonder how European rules could affect your inheritance. Well, understanding European tax systems is key to managing your wealth across borders. When Americans inherit assets in Europe, they face a mix of U.S. and local tax rules. The United States taxes all worldwide assets of its citizens, but only if the estate exceeds a certain size. For 2020, that exemption is $13,610,000 per person, or $27,220,000 for married couples. If your estate is below that, you won't owe federal estate tax in the United States. European countries usually have their own inheritance or estate taxes. These taxes depend on where the deceased lived or where the assets are located. For example, in Germany, inheritance tax is based on the beneficiary's relationship to the deceased and the value of the inheritance. Spouses and children often get higher exemptions, while distant relatives or non-relatives pay more. The rates can go up to 40%, but exemptions vary. France, Spain, and Italy all have their own rules, with different thresholds and tax rates. Some countries tax the estate itself, while others tax the beneficiary receiving the assets. There are tax treaties between the United States and some European nations. These treaties can help prevent double taxation. For instance, Germany has an estate and gift tax treaty with the United States that allows for tax credits. This means if you pay inheritance tax in Germany, you might get a credit against U.S. estate tax. However, these treaties have limits and specific rules, so it's important to understand how they work. The United States does not have a federal inheritance tax, but some states do. If the decedent or the heir lives in a state with inheritance or estate taxes, those rules could apply. For example, states like New Jersey or Maryland have their own taxes, which might impact your inheritance. When inheriting foreign assets, Americans may need to report the inheritance to the IRS using Form 3520 if the amount exceeds $100,000. This form is for reporting foreign gifts and inheritances. It does not mean you owe income tax on the inheritance itself. But, if you earn income from inherited assets, like dividends or rental income, that income is taxable in the United States. Retirement accounts like traditional individual retirement accounts or 401(k) plans are also part of the picture. If you inherit these accounts, you will owe income tax on distributions, even if you live abroad. Roth IRAs might be different, as qualified withdrawals can be tax-free. Planning ahead is vital. Working with international tax advisors can help you understand both U.S. and European rules. They can suggest strategies like setting up trusts or transferring ownership to reduce tax burdens. This way, you can pass on your assets efficiently and avoid surprises. In short, American expats living in Europe need to be aware of how both U.S. and local European inheritance laws affect their estate. Knowing the rules helps you protect your wealth and ensure your heirs receive what you intend. Consulting with professionals who understand cross-border inheritance can make a big difference in your estate planning journey.